Hi, I'm Wayne, a mortgage planner. Today I'm going to share what is Islamic home financing compared to conventional home loan. For part 1, the advantages. We found that most of the borrowers, especially non-Muslim, are not really concerned about how the Islamic financing is working before they accept it. Just simply because, number 1, some of the banks are offer slightly lower interest rate than conventional loan. And number 2, the stamp duty for Islamic financing is 20% cheaper than conventional loan. And the last one is, generally, Islamic financing will not impose lock-in period. Besides these 3 significant reasons, as a smart borrower, we should take a little bit more initiative to know more about Islamic financing compared to conventional loan. To make things easy to understand, I would rather say Islamic financing is using sharing concept, whereas conventional loan is using lending concept, which everyone are already quite familiar. For Islamic financing, the financier or the bank and the borrower are holding the property together as partnership according to their share proportional. For example, if a borrower pays 10% down payment to buy a house and get 90% financing from the financier, so the percentage of shares hold between the borrower and the financier is 10% against 90%. And next, the monthly installment paid by the Islamic financing borrower is calculated based on the effective profit rate, or known as effective interest rate in conventional loan, which is proposed by the financier. Here we can see the profit is a trading term which can share among the partners, but the interest is a lending term which the borrower has to compensate to the bank. Just in case the borrower had defaulted the installments, but the late payment charges of Islamic financing will not be compounded from month to month like conventional loan. Okay, let's back to the effective profit rate, which is subject to the movement of Islamic base rate IBR, or known as base rate BR in conventional loan, and it will be revised by the financier whenever necessary. In order to be fair for both parties, the financier has to propose the ceiling profit rate to set the maximum profit in the financing upfront, because the effective profit rate might be exceeded the ceiling profit rate one day along the financing tenure. For example, the current Islamic base rate is 3.6% and the effective profit rate is IBR plus 1.9% equals to 0.5%. And the ceiling profit rate set by the financier is 10%. Okay, let's say if the IBR is rising up to 9% one day, so the effective profit rate at that time will be 10.9% supposedly, but the financier only can claim back the profit up to maximum rate of 10%. This is another advantage of Islamic financing to protect the borrower if compared to the conventional loan, which is never guaranteed the maximum effective interest rate. Therefore, the financier has to state out the bank sales price in the financing upfront based on the ceiling profit rate in order for borrower to buy over the share progressively by using their monthly installment. That's the reason why some of the borrowers will get shocked by a huge amount of the bank sales price as their outstanding balance shown in the statement if they not understood this clause before they accept the offer. So please don't misunderstand that we must pay back such a huge amount of the money to fully settle this financing at the end of the day if we take Islamic home financing. I will continue to share more info about this topic in part 2. So please stay tuned and make sure you already like our Facebook page on the top and subscribe our YouTube channel as below link. Kindly leave us a comment or PM us if you have any queries, and please like our videos and share it if it does inspire you and others. Thanks for watching and see you soon.